Hello, good afternoon. Trust you're all well. We're just going to get ready for the report that is due out shortly in about 14 minutes. So we've got a bit of time to go through the market systematically and analyze the market and then get ready for when the report is actually announced. So I'm just going to go through everything again systematically. As usual, you start off with the economic calendar. And today is the 10th of September. So yeah, today is the 10th of September, Thursday the 10th. Of course, this is GMT plus 2, again, because I'm in Rwanda. So this is all GMT plus 2 times. And of course, we're looking for reports of high importance coming out today that could affect the euro or the US dollar, because it's the euro-US dollar we're looking at mainly. And as we all know, we have the European Central Bank interest rate decision that is due out shortly at 1:45 my time, but that's 12:45 UK time. And then after that, about an hour after that, they're going to hold a press conference. The press conference really is just to discuss to the public their reasons behind whatever decision they make at 1:45. So the main report is at 1:45. Sorry, well, again, like I said, that's Rwandan time. So that's when the main report to be announced. That's the one that we're really interested in. That's the one that could affect the market. And then after that, you know, they'll have the payments. Of course, them releasing more details about their decision regarding the interest rate, that could also further affect the market. So of course, you need to be wary about both times. So basically, from the time the report is announced till after the press conference, all sorts could happen, potentially happen in the market. But the main one, or the main event, is really the interest rate decision. That's what dictates the whole thing. And that's what could move the market. And that's really the last two events of today, the interest rate decision and the press conference afterwards. Now, with regards to the interest rate decision itself, the key now is whether the announcement will be as the economists forecast it to be or not. I mean, that's the key, because you can see here from the table that this shows you the previous session. The previous report was 0%. So that was the previous one, it was 0%. But the forecast, what the market is forecasting is that they're going to maintain the interest rate at 0%. So if the actual report comes out and the actual report is still 0% as the market forecasts it, then there might, again, you don't use the word always or never, but there might be not much reaction in the market if the interest rate decision is as forecast, as people expect it to be. But if they either cut interest rates or increase it, then that could obviously cause a huge reaction. Again, there's no certainty, only God knows what will happen. But I'm just saying from experience, if the report is as forecast, then there might not be much reaction in the market. If the report is against what is being forecast, either which way, if they either increase it or cut it and they don't maintain it, then that could cause a huge reaction in the market. But again, we wouldn't know till that comes out. But again, that's what we will see when the report is released. We will see whether the interest rate is maintained, increased, or decreased. If it's maintained, there might not be much reaction. But if it's other than what the market forecast is to be, either by cutting it or increasing the interest rate, then that could cause a huge reaction in the market. So we'll see. And again, this is why you get ready about 10 minutes before the report comes out, because once the interest rate decision is announced, if there is a cut or an increase, the market could react almost instantaneously. And if the market does react instantaneously, it might not give you time to start looking for where to place your orders or where to place your pending orders. So you want to have your pending orders in place and everything in place just before the report is announced, in case the market takes off immediately the report is announced. So that's what we're going to do. We're going to get ready for the report that's going to be announced in about 7 minutes. So there's the IG demo platform. So going to the platform, I have two platforms. Of course, this is my live platform, which I have to be ready to trade that too. But let's go to the IG platform, and then after we've placed our trade on the IG platform, we'll concentrate on the FX Primers platform, which is a live platform. So looking at the IG platform, we can see the market was initially trending sideways this morning. Of course, it then broke the sideways trend around that point, and you can see it's just hovering below R1. So I'll get rid of these white lines now, because it's broken that sideways trend and it's formed a new sideways trend there. So we'll just get rid of that for now. So we can now, this order here is from the swing trade. It's a stop loss from the swing trade. So remember, we have the swing trade pending order here just below the moving average. So we have the pending order here. So that's what's showing on the 5-minute time frame. So that's from the swing trade. So from a day trading point of view, we can see that the market is now sort of trending sideways between R1 and the pivot point. And again, like I always say, what you don't want is to get the market to take you into the trade just before the report comes out. So you can see that the market is currently very close to R1. So we'll probably wait about a minute or two before we place an order just above R1. Because again, that's the good thing about us doing this live now, because you will see when the report comes out, the market will jump up and down, and there's always a chance it would just take your order just above R1, fall back down, take you out, then go straight back up again. So that's what could happen. But we can see clearly that the pivot point is far away from where the market is now. So we can go ahead and place a pending sell order just below the pivot point. So you can see the pivot point is 1.1798. So we'll sell 2 pips below that at 1.1796. So 1.1796. So we're saying at 1.1796, 2 pips below that. So stop loss to be 20 pips above. That'll be 1.816. And take profit to be 60 pips below. That'll be 1.736. Okay, so we've got a pending sell order ready. So if the market falls, when the report comes out, then we're happy to sell 2 pips below the pivot point with a 20 pip stop loss and a 60 pips profit limit. Now, if the market goes up, we'll be happy to buy just above R1, but like I said, we don't want to place our order there just yet. because the market is quite close there, but we'll get ready. So we know R1 is 1.1844, so 2 pips above that is 1846. So 1.1846, and 20 pips below, that will be 1.1826, and 60 pips above would be 1.1906. Oops. Oh, sorry, I made a mistake. Let me just quickly delete that. What I was going to do is just have the order there ready to place, and then place it just about a minute before the report comes out. So let me do that again. 1.1846, 1.1826, and 1.1906. So we'll just have the order ready to buy 2 pips above R1 at 1.1846, 20 pips stop loss, 60 pips profit limit. And you can see it's now 3 minutes to go. So when it's about 2 minutes or less, then I'll just place the order there. But like I said, there's a risk the report will come out and take that order and then fall back down. But that's part of trading. It's a risk you take, because it could also just go up and keep going up. So again, trading is high risk. So we're willing to take that risk. And if we lose out, we lose out. We've got our stop loss in place. But at least we're placing it using our entry points, because you can see R1 hasn't been broken yet, so we can use it to buy. But we're trying to make sure we don't get into the market too close to the report coming out. So I hope you're all ready. And we've got less than a minute now, and I'll place the order, and then we'll see what happens. So once I place the order, if you have any questions, you can either raise your hands or send your questions through the chat box. Was the sell order 2 pips below? Yes, it was. The pivot point is 1.1798, and you can see my sell order is 1.1796. It was 2 pips below the pivot point. Sorry, excuse me. Okay, so it's now 1 minute to when the report will come out. So I'll place my buy order now, and we'll see what happens. So we're now at the mercy of the markets. So we'll see what the market does. And again, that's the beauty about trading. Only God knows what's going to happen. We don't know what the report is going to be. Are they going to maintain the interest rate at 0%? Are they going to cut interest rates and make it negative? Or are they going to increase the interest rate? We have no idea. All we just know as traders is that their decision could affect the market positively or negatively. And we'll see. If it affects it negatively and it falls, well, we know we want to sell just below the pivot point. If it affects it positively, then we're happy to buy just above R1. So it's the market that will decide. So you can see the report has been announced. So it's now 12:45, and you can see it's now taking our buy order. So we're now in a buy trade. We'll see what happens. Like I say, it could just fall back down and take us out, but that's why you have your stop loss. Of course, again, if we get taken out from the buy trade, having clearly broken R1, then of course we can use R1 again to trade. So if we lose out on that buy trade, our only opportunity to trade again would be the sell below the pivot point. Okay, so we'll see what happens. Now, while, like I say, if you have any questions, do raise your hands or send your question through the chat box. But I'm just going to go through the week, because again, this is what we discussed on Tuesday. Tuesday during the live session, why it's important to check the rest of the week to see if there are any major reports coming out or that could affect the trading for the whole week. And I went through that in detail during the Tuesday morning session. So if you missed that, you can watch the recording. The recording is posted on the platform from Tuesday, so you can watch it. But what I'm just going to show you now, let's just go to the 15-minute time frame. So we can see this is now the 15-minute time frame. So we can see the trend of the market from the 7th of September, that's Monday. So you can see from Monday till today, we just want to see the whole picture from Monday, the 7th of September till today. You can see the market didn't have any direction. And again, this could be due to this report coming out today, which is what we were discussing on Tuesday, that because you know the European Central Bank report is coming out on Thursday, today, you won't be having 3 attempts on Monday, 3 attempts on Tuesday, 3 attempts on Wednesday. You're going to be very careful trading. You might just have 1 attempt a day because you know there's a big report coming out. And you can see looking throughout the week, you know, there wasn't much in terms of discernible trend in the market since Monday. It's just been all over the place. Okay, let's go back to the 5-minute time frame. Let's see if we can see if there's any outcome. So you can just refresh the economic calendar to see if it's showing up. So you can see they maintained the interest rate. So the forecast was 0%, and that's what it actually was 0%. They maintained it. So again, that could explain why you can see there wasn't a crazy reaction to the market because they maintained the interest rates. So like that's what I was trying to explain. If they had cut it or increased it, then that could have caused a huge reaction in the market. But since it was as expected, as forecast, then that's not surprising to the market, hence why there wasn't much of a reaction. So again, you can see that live. So again, so for those who are trading the economics news for the first time, this is what we're talking about, that yes, you do not trade before the report. You do not trade before the report, but you get ready before the report is announced, assess the markets, decide where you want to place your pending orders, and then make sure your pending orders are in place just before the report is announced. So you don't want to be placing your pending orders 2 hours, 3 hours, 5 hours before the report. No, you just want to place it just before the report is announced. Okay, so I think there's not much else for us to do. Like I said, if the market takes us out from this buy trade, then there'll be no other opportunity to buy because R1 has been broken. So if it takes us out from this buy trade, the only other trade we have for today will be to sell below the pivot point. Okay, any questions before we end the session? Like I said, there's nothing else to do. We've already made our decision as to where to enter the market. The interest rate decision has been announced. The only 2 possible entry points we have at the moment, to either buy above R1, which is what we're doing now in a live trade, or to sell below the pivot point. Like I said, if the market obviously keeps going up, then fine, we're in the buy trade. But if we get taken out and we lose out on this first attempt, well, because R1 has been broken, we won't be able to use that to buy anymore, and we'll only be able to sell below the pivot point. So like I said, once you've made your decision, the rest is for the market to decide what it wants to do. So my decision has been made as to where I want to trade, and then I leave the rest of the market to decide what he wants to do. So any last questions before we end the session? Of course, I'll update the platform as we go along, and the recording of this session to be posted on the platform later.